Hello everyone, welcome to the Weekend Market Update series where I try to analyze the markets and make sense of what is happening in the markets from a technical point of view, also from a fundamental point of view, and my favorite, from the macro point of view. So without further ado, there's a lot of things that I want to discuss today, so let's get started. So going into this week, I was very cautious. And the reason why is because I knew that the five of the biggest companies in United States, that is Apple, Amazon, Google, Meta, all of those companies were reporting this week. And all of them, most probably, they were reporting after hours, that is post market hours. So I was very cautious because those effects of those earnings is going to get reflected on the next day. So that was one thing. The second thing going into this week was we had an FOMC meeting, that is a Fed meeting, and we had the interest rate decisions was going to happen. So with that in mind, I was very cautious, and I had my position size trimmed down to 50% so that my risk management is taken care of. So with that perception in mind, I started this week. Now going on to the weekly analysis first. So let's go to the weekly time frame and see what we can learn from it and my observations from the weekly chart. So while doing the analysis for the weekly time frame, I mentioned the support levels and some resistance levels which are important going forward. So let me show you all those levels and my insights into actual charts. So this is the weekly chart, as you can see. Now in this weekly chart, for all the viewers who are new to the channel, I have drawn the Fibonacci pattern from the highs of 2021 till today. So what I'm looking for is the actual retracements and the important levels. So as you can see over here, this Fibonacci pattern, you have until 1.618, that is the golden ratio over here, and I have drawn it till the lows of 2022. And as you can see, moving forward, we will have discuss the important levels on the weekly time frame. So all these candles that you see are weekly candles, and this I have marked a zone, which is this green zone. Now the reason why I have marked this green zone is because if you actually plot the Fibonacci pattern from the highs of most recent highs back in 2023, and you extend it to the lows of October 2023, then you will see that this zone is a resistance zone. But since on the weekly time frame we have closed multiple weeks above that zone, now the same zone becomes a strong support. So the strong support zone lies in the range of 16,760 that is marked over here. And one important thing that I wanted to discuss over here is right now we have a very strong close on the weekly basis. So the immediate resistance, which is on the weekly time frame, is the top of the Bollinger Band, that is this one. So this is the top of the Bollinger Band, which is sitting at 18,100 level. Now 18,000 is also a psychological level, so you can expect the consolidation which can happen, or sideways, or a small pullback or a reversal that can happen at 18,000 levels. So far what we are seeing over here is the immediate support is sitting at the white line that you see over here, that is I have highlighted over here. This white line is basically the anchored VWAP, which is starting from January, and it is like a yearly anchored VWAP. So that white line is a very a strong support on the immediate level. So that is corresponding to 17,186, and this is going to be the strong support zone. Now the problem is a lot of people are waiting for a big correction or a big pullback, and we actually tried. So market tried to go down, but that was not even 5%, and we rallied back again. So there is an incredible strength in the markets as of now. There were talks about recession, and I will talk in that upon that manner in the section of macroeconomic. But right now on the weekly charts, the bullish momentum still continues. So right now we have all the news behind us. All the earnings are done, all the Fed meeting is done, the interest rate decision is done. So as of now, there is no possibility of a strong negative news until and unless the Middle East crisis escalates. But the weekly charts so far looks bullish. So my immediate resistance is going to be this, that is 18,100 levels, and my immediate support is going to be sitting at anchored VWAP level, that is this one, 17,186. and the strong support is going to be in this green zone, which corresponds to the 16,760 levels. So that's my take on the weekly time frame. As you can see over here, this bullish momentum or this bullish move is also being supported by higher volumes. So if you can see over here, the volume has gradually increased. So this is not a a rally which is not accompanied by volume. It is accompanied by volume as well. So it is right now the markets are incredibly strong, and to sum it all, on the weekly time frame we are still bullish. So with that in mind, let us go to the daily time frame and see what we can analyze from there. The daily charts are very interesting this week because there was so much daily swings because of a lot of news events. So I wanted to discuss some key important levels, and I wanted to show you the possibilities moving forward. So going on to the charts, this is the daily charts. Now there are too many important takeaways from the daily chart. One being, there is this red zone that you see is the resistance zone that I have drawn. It's because if you construct a Fibonacci retracement charts from here, that is the top, and here, that is the bottom, then somewhere around here, there is a 1.618 ratio coming over here. And if you can see and notice, like normal price action, this zone has been tested 3 times in this week. So the first time it got tested over here, the second time it got tested over here, and the third time today. So if we close above this zone, then that would be very bullish sign. So if somehow on the daily basis, if we can close above this zone, then the next level that we can test is the Bollinger Band, that is the top of the Bollinger Band, or the R1 level, because remember the month of February is started. So the pivot levels will be revised, and these are the new pivot levels. So on the bullish side, we need to close above this resistance zone, and if we do so, then the next level of resistance is going to be the top of the Bollinger Band, and the immediate level of resistance is going to be this R1 pivot level that you can see. Now on the downside is very interesting, because as you can see over here, this neon box that you see is a gap up and gap down day box. So there was very little price or trading activity that happened inside this box. So as you can see, after Tuesday we had a huge gap down going into Wednesday, and then going into Thursday we tried to close this gap, but the sellers were so dominant that we had to close near the gap itself. So and then finally, when the Apple, Meta and Amazon came out with very strong earnings, we again gapped up today and we closed at a higher end. So that was a roller coaster week. So for me, going forward, the immediate support on the daily time frame is going to be this, that is corresponding to 17,560 level. Why am I saying this? Is because one thing, the 5-day EMA is sitting over here, and also the anchored VWAP for the month of February, that is this white line that you see over here, both are coinciding at the same level. So the immediate level of support is going to be very strong at 5-day EMA and the anchored VWAP. So and the next level of support is going to be this, that is the 13-day EMA. And finally, if we break down, then this, according to the price action data, the lows of these two candles is going to be the last level of support. So in that meantime, this 26-day EMA and the mid of the Bollinger Band would be somewhere around here. So keep a close eye on these levels, because normally in technical analysis, what happens is big gaps do tend to fill over the time. So it is very possible that we go up like this and then come back to test and fill this gap again and then go higher. So this is only a possibility, but as you can see, that these kind of huge gaps tend to fill a lot of times. So there is a probability that we can fill these gaps. So my summary on daily time frame is keep an eye on this gap fill area, and keep an eye on this resistance area. If we close above this range, then we will test definitely R1 and the top of the Bollinger Band. And if we do not fail to close above this resistance block, that is red block as you see, then we will surely test and fill this gap fill area and then move higher. So that's my take on the daily time frame, and that's my learning from the daily time frame. So far we are above 26-day EMA, so technically speaking we are bullish, so there is no reason to worry. Also the volume was very high due to all the news events going on, but yeah, that's my take on technical levels on daily time frame. So now coming on to my favorite part, that is intraday analysis. So in intraday analysis, as I promised all of you that I am going to create a detailed strategy video, which I have created, and I have shared my thought process and my strategy on how do I, know like if should I go long or should I go short. So you are more than welcome to please explore that video in the training and education series. That is my strategy for 2024 series, so that you can learn the thought process. So coming on to the intraday time frame analysis, my thesis going into today was the background was set. So today, 5:30 early PST, that is Pacific time, we had the non-farm payroll data release. So it was a very huge volatile event. Non-farm payrolls get released every first Friday of every month. So normally it is very volatile. So first, let me go to the charts and show you what happened. So as you can see, this is a 5-minute chart, 5-minute time frame chart, and as you can see on 5:30, the non-farm payrolls got released. So because of that data, actually the entire index had a shortfall of 78 points, as you can see over here. So this was a huge red candle formed on the pre-market basis. So that was the background going into today's regular session, that we had a negative news and the market did fall. Now, what was my thesis? So at 6:30, the regular cash open, started. So this is the time where regular market started. So going into today, I had two backgrounds, and let me share that. So recently I came across the various uses and this brilliant indicator, that is VWAP. So most of you must have seen the VWAP as a single line indicator. Now that is true, you can use it as a single standalone indicator, but when you use it with the standard deviations of 1, 2 and 3, that becomes very, very powerful. So let me show you what do I mean over here. So this panel that you see over here is a normal naked price action panel, and on top of it I have plotted the VWAP and the 3 standard deviations on the top and on the bottom. So as you can see over here, this alternating red and blue line is the actual VWAP, and the lines that are 1, 2 and 3 above are the standard deviations that is calculated from the VWAP. So that is this first pan. The second pan is the cumulative delta, which is calculated on per tick basis, that is per transaction basis. So basically what I want to know is, like, at any given point in market, who is dominant? Buyers are dominant or sellers are dominant? So how do I know this? The method to know this is, if the price action is above the VWAP, then obviously the buyers are dominant. And if the price action is below the VWAP, then sellers are dominant. So let me show you what happened today in the cash open, that is regular market open. So the market started at 6:30 in the Pacific time and 9:30 in the New York time. So we had a big hammer formed from the second standard deviation to the first standard deviation. Now, before even jumping on to how the open happened, let me show you what is going on in the weekly time frame. So this is my weekly time frame. Each candle that you see over here is the hourly candle. So what happened is, today we had this VWAP below the price action. Now this big green candle that you see is because of the positive earnings and market gapped up. So remember this, like, look at the exact precision where the market stalled. So after 5:30 for the non-farm payroll data release, the market kept on falling, and sure enough, it actually bounced back from the VWAP, and it exactly bounced from this point. So look at the precision of this indicator. So in the cash open, I was seeing and I was anticipating that this support level should hold, and if it holds, then there is a good chance that since the VWAP is down and the price action is up, the bias for the day has to be bullish. Now let me zoom on to the intraday time frame. So in the intraday time frame, 6:30. Now, as you guys know, and I have discussed this in the strategy video as well, that I normally refrain myself from taking any positions or any trades after actually before 45 minutes of the session. So once the regular market session starts, I normally take my trades after 45 minutes or 1 hour. And let me show you in the trading view, that is this software, the reason why I do this. It is because if you go to the economic calendar and if you see over here, after the cash open, that is after 6:30, we also had the Michigan consumer sentiment expectations, Michigan consumer, other data. We also had factory orders and whatnot. So my view is, let the news data get released, let the markets digest all that news, and then there is a very high probability that the market will reveal its real direction. So that is why I patiently waited till 7:30, that is 1 hour after the market opened. So after 1 hour, the situation was something like this. So at 7:30, we created, so let me zoom out so that you guys can see in a very nice way. So once we opened after 6:30, we went higher for 3 to 4 candles, and then we just consolidated over here. So as you can see over here in this box, we were just consolidating, and sure enough, after 7:30, on the 7:30, we made this huge hammer, and then we got a follow through candle, that is this green candle. Now the speciality or the uniqueness of this green candle was it took out all the recent high that were made on the closing basis. So it closed higher than the entire formation over here. And after 7:30, we had a lot of confirmation. So we had one confirmation, that is the crossover of a shorter term moving average from the below to a larger term moving average. So this blue line and this green line, so it is called as a bullish crossover because it crossed from below. So that was one thing. Second thing is, we got a confirmation after 7:30, that is a big hammer and the close of the entire formation, which was very high. So this was the second reason to go long after 7:30, because all the news were done. We were getting technical chart confirmation as well. And also, if you see over here, the VWAP was down, so the price action was up. So once that happens, I was also getting higher highs in cumulative delta. So this cumulative delta, as you can see over here, after the start of the session, it slowly and surely kept on going higher and higher. So if you see that cumulative delta is charging higher, that means buyer aggression is higher. So all the clues from VWAP, from cumulative delta, from moving averages, and from the pure naked price action, I was getting bullish confirmation signs. And that is why it did make sense to go long. So even over here in the weekly time frame, if you see, after we tested the VWAP over here, the first standard deviation was over here, and it went till the second standard deviation. So there was a very nice confirmation from all the technical aspects, that is from the cumulative delta, from the intraday cumulative delta and VWAP, also from the bullish confirmation of the EMAs, that is exponential moving averages. All the signs were telling me that there is a good risk to reward ratio in going long. So that is exactly what I did. I took a trade over here in going long, and I made almost 10 to 15 points. So as you can see, my trade completely went in my direction at the very next candle. So I was out of the position, and that was essentially my day, wherein the timing was perfect, the reasoning was perfect, and that is why we are paid for patience and discipline. So whenever the setup comes, we are supposed to take the trade. So that was my insights going into the intraday. So these are again the points that I can summarize for the intraday, because we took the trade after 7:30, we got the bullish confirmation from VWAP on intraday and weekly basis, and then we got the confirmation from the price action as well regarding this hammer and this green candle. So that was a very nice long opportunity. One interesting candle that I observed today and that I wanted to share on an intraday basis with you guys is because normally this never happens. So as you can see over here, if you go to the news section, right, and if you can see over here, after 10 o'clock, there was no big news. right? But as you can see over here, on the intraday basis, we got a very big, huge red candle over here out of nowhere on 940. So look over here. Right now the level was 17,750, and if you can see over here at the top, it was 71 point candle. Now what is so unique about this candle is it was coming out of zero news, so no news. It was coming out of no any substantial macroeconomic event that is happening. So apparently this is the proof that the algos are too fast in this in the execution. So any such event can trigger a big 71 point candle, that is a 5-minute candle. So that is why Nasdaq markets are so much volatile, and that is why your stop losses and your system needs to incorporate all the nature of this wild nature of Nasdaq, so that you can be a profitable day trader. So observe, even if you don't take positions in the market, just observe the market so that you are in sync with the behavior and the price action. So if I see anything unusual on the charts, then I will definitely share with you guys on these kind of videos. But this is something that I wanted to share, and on the intraday basis, the rest is history. As you can see over here, we took the long position over here, and definitely I did not hold my position till here. I would have made so much money, but the point over here is to be systematic, to be algorithmic, and to exit out when your profit targets are achieved. So I still have to learn to keep my position and ride this amazing wave, and I will evolve myself as a better trader from the learnings of these kinds of price action days. So that's all from my side from the intraday time frame basis. So now let's go and compare the correlated assets like QQQ. So if you can see over here, the Qs were pretty much in sync with the Nasdaq futures in the entire session. And the biggest clue also was from the VIX. So as you know, for the Nasdaq markets, we don't track the VIX. VIX is for the S&P 500 index. For the Nasdaq markets, we track VXN, that is the volatility for Nasdaq index. So as you can see over here, VIX was making constantly lower highs and lower lows. So it was constantly going down. So what does that mean? That means if the volatility is constantly going down, then ideally the markets should constantly go up, and that's exactly what happened today. So if you can see over here, this is a 5-minute chart, and it was pretty clear that the VIX was going lower and lower. It was making lower highs and lower lows. So even that was a very big clue for us that the markets are in a good positions to go up, because VIX is constantly going down. So that's the inverse correlation between the volatility instruments and the index instruments like Nasdaq. So with that in mind, let us now jump to the macroeconomic section, since the intraday time frame analysis is done over here. So in the macroeconomic section, I wanted to discuss two important things and one trivial thing. And let me tell you why. It's because these macro events are going to shape the trajectory of the market going forward. So this week, the 5 of the Magnificent 7 companies reported. Now, the earnings did not disappoint on the fact that the balance sheet is good and the fundamentals are good. The only thing that is worrisome is the forward guidance. So the forward guidance of pretty much all the 5 Magnificent 7 companies, they are pointing out to towards a slowdown or towards a colder quarter. So that's the problem over here. So even if you see Google, it was down 6 to 7% the next day when it announced the earnings. The balance sheet is good. They are minting money in terms of the top line and bottom line, that is the revenue and net profits. But because of the slower or pessimistic forward guidance, the stock fell down by 6 to 7%. Also, in the history of the growth stocks, Meta out of nowhere announced dividends. Also, there are some companies which are announcing buybacks. So those are very bullish sign. So on that news, Meta actually went up by 10 to 12% on a single day. And for a company like Meta, which is more than $1 trillion in market cap, going up 10% in a day is a very, very big big event, and they are more focused towards efficiency and reducing the task force and achieving more from less resources. So that's the very good news for the Wall Street investors, but a very bad news for the people who are actually working in those companies. So the real economy, to sum it all, is in good shape right now. There are no cracks right now, but the problem is the companies are still doing layoff for a leaner company, for efficiency reasons, for reorg, or for rediverting the resources to more ambitious projects. So on one hand, the companies like Google, Meta, or there are a lot of IT companies which are doing layoff, and on the other hand, those same people are announcing buybacks and are announcing dividends worth of $1 billion. So they have all the money in the world to announce buybacks and to give dividends, but they don't have the money, any money in the world, to give out to their own employees. So welcome to the real world. Welcome to capitalism. This is what it is. We common people, or we as an employees, pay the price. So that I'll leave that thing for you to decide and for you to take the conclusion. But these are the hard facts. So as far as the earnings side, it is good. The balance sheets are strong. It's just that the forward guidance is lower, and that is why people are not liking it. But so far it is holding very, very nicely. So coming on to Fed, our boy Jerome Powell has his speech, and there are two important takeaways from his speech. First is the rate cut is out of the table, in his own words, in the March meeting. So a lot of people were expecting a start of rate cut in March itself, but apparently Jerome Powell wants to see more data to confirm the thesis that inflation has permanently gone down, and he wants to make sure that inflation doesn't surge up because of the rate cuts. So he is prepared to keep the rates higher for longer, and that is going to be the conversation for the next few months as well. And also he has acknowledged on the other front that he has in his experience seen the peak rates. So the terminal rate that is sitting at 5.25 to 5.5% is the highest rate that we are going to probably see in this current rate hiking cycle. So that is a good news that we have seen the peak rates, but the thing that higher for longer, according to Chair Powell, is not good news. So either something has to break, or the economic data slows down, and that may force the Fed to stop and start the rate cuts. So in any case, we will see and we'll analyze the incoming data, inflation data, job numbers, and everything, and then we can take a calculated thesis as to what may happen in the more probabilistic manner. Now, one thing is the banking sector, that is the regional banking sector. To be more specific, there's a bank in New York that's a regional bank, and the stocks of that bank plummeted almost more than 40%. So we are seeing the bad effects of such high terminal rate, such high Fed funds rate, because it is definitely hurting commercial real estate. It is definitely hurting the regional banks, which are more susceptible to these kinds of interest rate environments. So I don't know, but something for the Fed to cut the rates, something has to break, or we may go into a recession. But that is the topic for new video, and I will leave you with a food for thought, for you to decide. But on the macroeconomic front, this is what is going on. On the geopolitical front, we have escalating situations in the Middle East. So even that, if it escalates, or if we have a full-blown war, then it's going to be really bad for the markets. So just so that you guys know, America right now is fighting war on almost 3 to 4 fronts. On one hand, we are providing billions of dollars of arms to Ukraine. On the other hand, we are helping Israel. On the other hand, we are trying to stabilize the Red Sea region by deploying a lot of military and aircraft carriers and destroyers. On the other hand, our bases are getting attacked. So there is a lot of things that can affect financial markets, and that is why I wanted you guys to be aware of it, and you guys to be staying on top of it. So that's the name of the game. This channel has an aim to actually share anything and everything which is related to markets and whatever can affect the markets. So that's all from my side today, and I would like to thank you for viewing, and I would like to encourage you guys to like, share and subscribe so that other people can get this quality content and spread knowledge and awareness so that you guys can take informed decisions. So with that in mind, I would like to thank you.